This is the Value Investor Podcast with Tracey Ryniec. All things value, all the time.
Welcome back, value investors. I recently got a good question from a listener about the Zacks Rank and really how it fits in with long-term value investing. So as many of you know, we use the Zacks Rank in many of these screens for this podcast to find the top stocks. But the Zacks Rank is a short-term recommendation of just 1 to 3 months. So how does that square up with being a long-term value investor? And let's be honest, most value investors are long-term. We all are in the camp of Warren Buffett. It is part of being a value investor to be a long-term hold of stocks. So this is an interesting question because how can long-term investors make the Zacks Rank work for them as they're holding for sometimes for years? It's good. This is a good question because we haven't covered the rank a lot on this podcast. I covered a little bit more on the Market Edge podcast, but not as much here. And we actually might even use it more here because so many of our screens, I do include it. So let's just remember what the Zacks Rank is. It's a computer algorithm that looks for changes in analyst earnings estimates. And these could be that they're raising the estimate or they're cutting the estimate. It goes both ways. These are analysts at the brokerage houses like William Blair or Wedbush. There's a bunch. It could be from a big brokerage house or small that maybe just specializes in a certain area, like, say, banks. Some of them have specialized brokerage houses, but it's not us here at Zacks sitting around and, raising or lowering the earnings estimates, and then the computer is figuring it out. It is a collection of all of this data, and that goes into what is the Zacks consensus. And it's fairly similar to what you'll find from, say, Reuters Thomson, which also supplies that's, similar data during earnings season. And that's when you are always hearing, the whatever company it is beat the estimate on earnings. And that is what the Zacks consensus is. So there's 5 different ranks. The highest is the number 1. That's what we talk about all the time, the strong buys. And those are about 5% of all the Zacks Rank stocks. Now, we do cover over 4,000 stocks with the rank. So it's a pretty small number. That is the number ones. As I mentioned before, it's usually between about 220 to 250 stocks. Then you have the number 2s, which are buys. This is a bigger category. So if you combine both the 1s and the 2s, it's usually between 800 and 900 stocks. Then we have the number 3s, which is the hold. I know a lot of you like to think like, oh, those aren't very good. But the 3 is the largest category. So it's kind of like, your grades in school back in the day, when you had A, B, C, D, and F, and the C's used to be kind of the average, and it was the biggest category. And that's when you're grading on the curve, right? That's what a number 3 is. It is the biggest category. It's about 80% of all stocks. A lot of stocks just kind of end up there after, a few weeks after earnings, when some of the earnings estimates start to drop off the algorithm. A lot of companies just kind of move into the number 3. So it's not necessarily good. It's not necessarily bad. More of a moderate neutral stance on those holds. Then we have the number 4s, which are the sells. And it's similar to the number 2s in that it's between 800 and 900 stocks. And then we have the number 5s, the strong sells. And that's also similar to the number ones, anywhere between 220 and 250 for those. Now, we mostly use the number ones and number twos on this podcast because why wouldn't we? As I've said many times, we want to find companies that have rising earnings estimates. And that's what that means when you get the number ones and number twos. Now, there are 4 components to figuring out the Zacks rank. So it does look at the analyst earnings estimates, but it looks at numerous different parts of those estimates. So it does look for the full year. So quarterly, not as important. So it's looking at the full year. And once we get into the middle part of the year, it starts to look at next year's estimates. So keep that in mind. And it looks at 4, as I said, 4 different components. So the first one is agreement. And that is the actual agreement of the analysts. How many are raising in the last 7 days, 30 days, or 60 days? How many are cutting during that period? Are they all saying the same thing? Is everybody raising at the same time or cutting at the same time? So that gets a lot of weight. And then it looks at the magnitude of those changes. Is it a big change after they've raised? Is it a couple of dollars, difference? Then that plays in because that's seen as, hey, something really good is going on here. If the earnings consensus is jumping that much, in a short period of time. Then it does look at the upside, which is the most accurate estimate. And then it does look at the earnings surprise history, which is the quarterly earnings. And is it surprising every quarter? And by how much is it surprising? Is it, are they beating by 1 cent? Or is it, $1? So all these factors play in at different magnitudes in the algorithm. And then it's running this algorithm almost every day. And remember, the earnings estimates can change and do every day when you're talking about a collection of over 4,000 stocks. So we're still in the middle of earnings season when I'm recording this in late February 2025. But we have seen, as soon as those earnings reports come in, maybe the company beat and raised, then those analysts go in and modify their earnings, estimates on that company. And then that's when we'll get a lot of change in the Zacks rank. Now, the Zacks rank is a good indicator to use. I've been using it for about 17 years now, and I have found it to be very effective on finding kind of hidden gem stocks, which is also why we like to use it here on the Value Investor podcast. It's a very good tool for value investors because it does cover a lot of small cap stocks that maybe might not be on people's radars. But that's also something to keep in mind with the Zacks rank. The size of the company matters. So a lot of those small cap companies, when they do have a rank, that means we have at least one analyst covering it because we need some estimates, right, to get the Zacks rank. So we might only have one. And a good example of that is a company that I recently covered for a Zacks Bull of the Day, which is on our website every day when the market's open. It'll have a bull and the bear of the day right there on the main page. If you scroll down just a little bit off of the kind of headline area, you'll see it there. And these cover a Zacks number 1 rank for the bull, which is a strong buy, and a number 5, the strong sell. Now, it has been my experience, and I'm going to share this little secret with you, that a lot of times when we're drafting up the strong sell, we'll go in and look at the estimates, like, why is this a number 5? Oh, things, the estimates are usually being cut, obviously, for a number 5. But digging down a little deeper, we might find, hey, the story's not that bad. And this looks kind of like an interesting play right here, but only when those estimates start to turn around, right? That's what the rank is telling you, that there's some short-term stresses in that company's industry and or that business. And so the analysts have had to, cut and make some corrections. Now, sometimes you get a Zacks rank, like I said, where, the analysts might be cutting, but it's not all doom and gloom, as, some can be, where they maybe report, they miss, they have to warn on upcoming earnings. And that's when, it could be like a big slashing of the earnings. But sometimes it's just like a few pennies that they all have to adjust it at. And things don't look that gloomy. So those are the ones I like to keep on my watch list for when that Zacks rank will change, because it, can change frequently. And a lot of times those number 5s will move up either to the 4 or to just the 3 hold. And then we are off to better things usually in the upcoming quarters. So keep these little things in mind with the Zacks rank. Also with the Zacks rank, it is short term, as I keep saying. And so the purpose of this podcast, it is a little harder to use it for being long-term investor, because it will change constantly. So let me give you just one of the recent, like I said, bull of the days that I've done. It is Cal-Maine Foods, ticker CALM. And the reason I did it, it was Zacks number 1, but the estimates are soaring on this company because they are the largest producer of eggs in America. So the price of the eggs has doubled. They don't hedge the eggs, so they are getting the benefit of those higher egg prices, because that's what they're selling them to the grocery store at the higher price. Now, they have had an impact from the avian flu on their hens, and they've talked about that, how many they've had impacted, and also where they're expanding to try to meet the demand from various others that have been impacted as well. Obviously, we know a decent number of hens have not made it, have been culled from the herd, so to speak. Said, I'm trying to find it here, for 2024, the numbers were, here we go. It was 38.4 million commercial layer hens were depopulated, and 1.8 million poulets, is that how you pronounce it? Those were also depopulated in 2024. But there was avian flu that hit the hens prior couple of years as well. So it's just been kind of an ongoing thing. And it takes about 6 months to try to repopulate some of these hens. So that's why we're getting the shortage right now. And so Cal-Maine Foods is seeing benefit from the egg prices rising. It's got the number 1 rank. Now, this is very lightly covered on Zacks. We only have one estimate on Zacks because it's kind of this niche industry, right? And so Wall Street just hasn't paid it that much attention. But that one analyst has been raising the estimates in the last 30 days. And so for fiscal 2025, you have earnings now expected to be $15.59. That's up from $8.54 just 30 days ago. So this is an example of one of the dramatic increases. So we do have agreement because we only have one estimate and there's nobody cutting. There's just this one analyst raising. So the algorithm does look at that as agreement, strong agreement. The magnitude is enormous. So like I said, it went to 15.59 from 8.54 suddenly. Like that's a big change. And it actually, we don't have quarterly earnings surprise data because this analyst is only covering for the full year. So this is all, come into being a Zacks number one, Cal-Maine only made 569 a year ago because the egg prices were lower. So this is a very cyclical up and down with the earnings stock. And for fiscal 2026, this analyst believes this egg problem is going to fix itself because it's back down with earnings to 469. So that's even under 2024, fiscal 2024, which is 569. So you can see a lot of differences in what's going on with the Zacks consensus here. This is a very up and down type of company, like an oil, energy, natural gas, a lot of the metals, fertilizers, anything that has, this kind of commodity doing the pricing and for earnings is going to see big changes like this. But I bring this example up to show you how the Zacks rank is kind of working here, but also that if you are holding this long term, this is really showing you that maybe next fiscal year it's not going to be so good. This is where we get kind of that trappiness thing that I talk about a lot on the podcast. And this type of stock, you definitely see that. But we also can get the flip side, the number fives, and the pressure on a stock as a number five, especially when you're holding those the long term. So I guess the question really is, again, how do you use the Zacks rank in the long term? And I do use the Zacks rank for Zacks Value Investor portfolio, which is a long-term buy and hold type of portfolio. But we have a target price chart in that portfolio that we do use to deploy with upside prices for the target prices, but also a sell price on the lower end, which we have deployed over the years, especially during the pandemic. When we hit those sell targets, we did sell, even though we're long-term holders. And in 2022, when we had the big sell-off, a lot of the stocks that were our big winners from the pandemic did hit the sell targets, and we did have to exit a lot of positions when that big sell-off happened. But that's why we keep a target price in that portfolio, even though it's long-term, because we do still want to capture a lot of our gains. And the Zacks rank number 5 does show stresses in industries and with those earnings. And the earnings decline does tell us, hey, there's not growth here right now, and maybe you should take another look at it, even as a long-term investor. So we use the Zacks rank a lot in that portfolio to pick stocks because that's what it's really good at. But we do track the Zacks rank on that target price chart. I had it included in there so that people could see what was going on with the rank. And right now we do have a Zacks number 5 rank stock in there. I'm looking, suddenly when I'm recording this, we have 2 that are now number 5s. There was only 1 when I was preparing for this podcast, and now there's 2. This is what I mean about the Zacks rank changing daily. So both of these are in the home building area. And one is a home builder, Pulte Group, ticker PHM. This was a later addition that we made to the portfolio as the home builders still had rallied a lot. They were still cheap. And so we decided to add a little more investment in this area. And that was when the ranks were, number 1s and number 2s. But now it is a 5 here and it has fallen to a 5. It has reported earnings. So the home builders under pressure, all of the home builders, they all mostly have not great Zacks rank right now because those margins are expected to fall this year. And that means falling earnings for the home builders. And So as a group, this is going to be challenged. So just looking at the industry rank for Pulte Group, it's in the bottom 3 of all Zacks industry ranks. So we do have a rank on the stocks. Underneath that, on the home page, when you put in a ticker, it says Zacks Rank, style scores, and then it gives the industry rank. And the industry rank is useful too, to tell you that, hey, it's not just Pulte Group that's having some issues. It's the entire home builder group, because it's in the bottom 3%. It's ranked 238 out of 246. That's very bad. But again, not surprising. We've had a lot of the earnings estimate or earnings reports come in with these guys, and they're all, saying the same thing, that it's not about sales being down, because those have been down for a couple of years now, but it's about, hey, if tariffs are put on, we're going to have to pay more for the garage doors, for the windows, possibly for the paint, for a bunch of the items, the lumber, a bunch of the items going into the homes, and that's going to hit the margins going forward. So you can click on the industry rank link on Zacks.com, and it takes you to the entire industry outlook. And just scrolling down, it does give the stocks in this group. There are 17 in the home builders. And looking at the list, it tells you the Zacks rank, and this there are no Zacks number 1s or number 2s. That's what I would expect with an industry that's this low in the industry rank. There's only 3 that are holds right now. And then I see a bunch of 4s. Let's see how many 5s we have. We know Pulte's in the 5s. Pretty many 5s. 1, 2, 3, 4, 5, 6, 7 number 5s. That is a lot. But again, this is telling me, as an investor and a long-term investor, hey, it's not just Pulte Group. It's everybody. It's the whole entire industry. So as a long-term investor, you have to ask yourself, what's my goal here with holding this company? When will the industry turn around? It was expected to turn around here in 2025 with more sales, but that doesn't always go to the earnings. And the sales were supposed to be boosted as those mortgage rates came down, as the Fed was cutting. But then the mortgage rates didn't come down. They've been over 7% the last couple months. They have finally moved back into the 6s here. And that should give a boost to the sales for the home builders. But now we have these other issues hitting the earnings side more so than just buying down the mortgages, which was a cost to them, and they were paying it the last couple of years. But this was all supposed to help them, like the lower mortgage rates, and then more people buying homes, so they would sell more. Then the margins would at least hold or maybe even improve off of those, not having to pay as much to buy down the mortgages. But now we have these other issues. So a lot of uncertainty in this group. They are all still very cheap because the earnings, while being cut, are not being cut that much, and the stocks have all sold off. A lot of these are at 52-week lows now, not multi-year lows yet, but they have weakened considerably. So we're getting, cheapness on the price side while the E is also going down. So that's where you get a bit of the trappiness, as I said. But if you're a long-term holder, that's where you have to go and look at what's actually happening with the industry. So I did want to take a closer look at just Pulte, those earnings estimates, just to kind of see. So they have a PE of 8.5 and a PEG of 0.28. So that's very cheap. But you can now see in the detailed estimates page, for 2025, revenue is expected to be up just 1.1%. So that's gone flat now. And earnings expected to be down 16% because it really can't hold what it was doing the last year, which was a great year for them. and they made $14.69 in 2024, expected to make $12.32. So this is what happened in 2022 when the Fed raised rates dramatically. That hit the margins as well. Earnings declined, plus sales dropped. So it was like a double whammy in 2022. I did sell out of the home builders in 2022 because when all of that was happening, the outlook for housing just wasn't good for at least a year. So I always thought, well, we can get in again later when we see what happens with all of this, rising mortgage rates and everything else. And then things looked good still. The home builders were able to buy down the rates. They have some customers buying in all cash. The home sales did decline, but still remained pretty healthy. They didn't have as much competition with existing homes. So we got back in, and Pulte was one that we got back in on. We also own Toll, ticker TOL. That is not showing up as a number 5, and they just reported earnings much more recently. So they are a number 4. So estimates are being cut there. They're trading with a PE of 8.1. A little bit different business model as just luxury, but still for this fiscal year, which it just started, revenue up just 0.7%. So basically flat as well. Earnings down, but not as much as Pulte, down 7.9% to $13.82 from $15 a year ago. And remember, for the home builder and housing side, 2 things determine the home builder's destiny, let's say, and it is mortgage rates. So we've been talking about those, and also unemployment, or what's happening in the job market. So if you get a lot of layoffs or you head into a recession, obviously, people are less likely to buy homes. So you will see a slowdown on the sales side, rightly so. And then mortgages, as those rates rise, even with the share buy down, it's still more expensive. So you do see a slowdown in sales there. So a lot going on with this industry. I'm still holding both of these home builders. The shares have weakened. I gave pretty generous stops in the sell on the target price. So I'm not sure we're there yet, but I do think we are going to continue to see some of these cuts, and some things have changed in the market with more existing home inventory. So they're not the only game in town anymore. And when that happens, that means they do have to cut their price. That also goes into margins, obviously. And so a lot going on with these home builders. These types of stocks, because they are more cyclical, are the kind where maybe we should be paying attention to what's going on with the Zacks rank here. And you can always buy in again later when the Zacks rank does change around. Another one in the same category that is also a number 5 in the Zacks Value portfolio is Builders First Source. And that's a number 5 right now. And they are what it says. They're the Builders First Source. So they're kind of like a Home Depot, but only for the professionals. And they have a couple hundred stores around the United States. And this was also similar to the home builders, but they had struggled more with the earnings side. So the earnings really got hammered when the sales slowed in 2022. We saw about a 30 to 40% drop in new home sales. Home remodeling is also slowed as well, both where you use builders, right? And so the earnings really got slashed in 2022. But they've been slowly building and coming out of that. And so the rank got better. The stock has remained cheap. We got back in it. And we've been in it a couple of years now. Shares have been busting out, and they did hit new 5-year highs in 2024. but now have weakened on this whole home building story. And now this is when we are getting those estimate cuts for 2025, 2026, because of everything I just talked about with the home builders. So this is still cheap at 14.5 times, but this does have the value trappiness as well. Earnings expected to decline 15% here in 2025 after, a couple of years of slowly grinding up a bit higher as, the building has kind of adjusted to these high mortgage rates. But now we're seeing the cut again on the tariff news and these other things. So they're looking for 982 now, and a year ago they made 1156. So that's the decline of 15%. Expecting for now a rebound in 2026 back up to 1105, which is a gain of 12%. The stock is not that expensive. If I was owning it, it was trading at 30 times, and we saw this kind of cut, then I would be much more concerned, because I would be overpaying for what's happening with these earnings. But here, I'm not overpaying as much. It's a question of, will we actually get that turnaround in 2026? That remains to be seen, right? So yeah, like a lot is going on in this home building and just even the home sector. I'm just taking a look right now at another of my favorite stocks when we're talking about valuations and using the rank and being a long-term investor. And I've talked about it on the podcast in the past, and it's Pool Corp, ticker POOL. Yes, pool, as in swimming pool. They are one of the biggest manufacturers, and they do all the maintenance, and they sell like the outdoor products for pools in the United States, but they also have business in other parts of the world where there's a lot of pools, like Australia. So Pool Corp, one of the big winners of the last 20 to 30 years now in investing, basically. It ranks up there always on the top 30 stocks of the last 20 years because it was cheap in prior years. Now, not so much. Shares have come down off of highs, but so have the earnings. So for 2025, just curious to see what's happening with the rest of the housing type of industries, because pools are related. And when you're feeling good, your home is going up in price, you have a job, all this stuff, and money is cheap. You can afford to pay to get the pool, but we've had a change in some of that. So for 2025, earnings now expected to be up 3.8%. So it's not going negative. So it's 1149 versus 1107 for last year. But since the earnings report, 5 estimates have been cut in just even the last week, and none have been raised for 2025. So they've gotten word from Pool Corp that, the economic conditions are changing, and the analysts were too bullish going into this year. So they've all had a cut. That's the agreement side of the Zacks rank. They're all in agreement, and 5 have cut. And then the magnitude, it's pretty big. 1149, as I mentioned, down from 1176. It's not just a couple pennies. It's a little slash there, but still not as terrible as I've seen in some cases. Now, what is the Zacks rank with pool? It is a 4, but what makes this one different than maybe Builders First Source and even the home builders is that the stock is not that cheap here. On a PE basis, it's trading at 30 times. The PEG ratio is 3.2. And some of that is because the shares simply haven't fallen as much as what the home builders or Builders First Source have fallen. So it hasn't gotten back into the value category yet. And some of these stocks are the ones I would be a little more leery of owning as a number 4, or if this goes to a number 5, even as a long-term investor, because it's just not getting down to where it needs to get for me to be like, I can hang around. It's cheap now. It's, when the rebound happens, which it will with pools as well, then we're in a pretty good position because we're already in it very cheaply. But this is not cheap. So it's not either a growth stock or a value stock here. And I don't like stocks that are kind of just hanging out there in no man's land, even as a long-term investor. So this is one, you really have to keep a better eye on if you are a long-term investor. But my guess is for some who have been in this one, because I've been watching it long-term for years and years, that you probably got in it a couple of years ago. So you are willing to wait out what's going on in the industry. It's not really pool cores, issues that are causing this decline in the earnings. It really is the economic conditions and industry-wide. Let's off a little bit of the home side because we know what's going on in those areas. And another area where I've had to sell out in the value investor is in the energy side, also a cyclical. Another area where I have had to sell out even as a long-term investor is in the chips, like Micron. I'm looking at Micron right now. It is a Zacks number 4 rank, but it hasn't reported earnings yet. So on those types of stocks, I tend to wait to see what happens with the earnings. One of the particular things with the Zacks rank is that sometimes the old estimates fall off before the next earnings report, and the rank will decline to the number 4 cell. But it's not really reflecting what's actually happening in the industry or with the company yet. So keep that in mind. It is one of the little quirks of the Zacks rank, but as long as you're aware of it, you know that that's one of the quirks. And so you don't get freaked out by seeing a number 4 there, which Micron is. Now, I also own Micron in the value investor. And this one, there's been a lot of questions about what is happening with the earnings estimates on Micron because people thought it being very cyclical, that its recent upside cycle was ending. The company has kept coming out saying, no, we still see a strong second half of the fiscal year. And so the analysts have been keeping the estimates fairly elevated, but 2 have been cut in the last 30 days, even before earnings, and nobody has raised. And so that has put pressure on the shares, and the Zacks consensus has fallen to 672 from 690. So the magnitude is pretty good there for the earnings cuts. So that is probably why we're getting the number 4 here, even though we are approaching earnings coming up in March. And so both those factors are probably in play, but it is showing like, hey, something might be going on here, and it might not be quite as good as what you thought. So a lot you can take away from this podcast is that it is much more difficult to use the Zacks rank with these cyclical type of companies. It's a little bit easier to use it for the long term when you have a non-cyclical, something like, an Alphabet or an Amazon. But Amazon, and actually most of the Mag 7s have been Zacks number 5s at some point in the last 5 years, especially in 2022 when all those earnings estimates were being cut. Amazon was a Zacks number 5 rank for a while, months on end, it seemed. Nobody freaked out. Long-term investors did not sell, but you did see a big crushing down of the earnings that year. That's when they laid off a lot of people. That's when they canceled, 16,000 job openings. And they basically had a regroup, and then they've been growing the earnings ever since. So 2024, they saw earnings growth of $5.53. Expected to see 631 this year. But the earnings estimates on a big company like Amazon are usually all over the place. If there's nothing, major going on, you just have the analysts kind of adjusting up, some are adjusting down, and you then get a mixture of earnings estimates. So on Amazon, 5 are up in the last 30 days, 8 are down in the last 30 days. So the agreement, nobody's agreed. It's almost split, not quite right in half, but close. One estimate is down also in the last 7 days. So that's more recent. So someone's getting a little more bearish in the last 7 days. I did see the CEO, Jassy, on an interview with CNBC, quite a long interview, in fact. So sometimes when these news comes out, or they're at a retail conference and they're talking about what the business is looking like, or they make an announcement in one part of the business, then the analysts go in and sometimes adjust the earnings estimates, especially on the big companies like this. And if the CEO or CFO is giving a lot of good information. So that could be what's happening too with Amazon right now. No changes in the last 7 days for 2026, either up or down, just the one change for this year. And the estimate actually is up for this year over the last 30 days to 631 from 624. So it's going in the right direction. And then next year expected to be up another almost 18% to 744. So that all results in just number 3, a hold. Because probably that agreement isn't really strong enough to move it into the number 2, the buys. You would need a lot more analysts raising and a lot fewer cutting to probably get that number 2. And then if they're all raising at the same time, then that's where you get the number 1 usually, because the agreement is so strong and, everybody is liking what they see, like with Cal Maine Foods, but they only have the one analyst over there. So a lot of moving parts with these really big companies like the Mag 7 and using the Zacks Rank on these big caps. And if I'm a long-term investor, I really am looking beyond the 1 to 3 month time period. And I'm a long-term investor in Amazon myself. And I don't own it in the value investor portfolio because it never did get cheap enough. I bought many years ago, but Warren Buffett also bought a number of years ago now as well. And Berkshire Hathaway still owns Amazon, and it's gotten cheaper while he's been holding it all this time. It now has a PE of 34. And that's close to its all-time lows on a PE basis. PEG ratio, because we do have a nice upward tick in those earnings, PEG ratio is just 1.5 right now. That's not in the value category of under 1, but that's still pretty cheap, especially for a Mag 7 stock that most people assume is expensive, that has high valuations. This isn't that high. So there is some value here with Amazon now, and there is growth, definitely. So these stocks are looking more interesting, some of these Mag 7s. And I've got a lot of them on the podcast in the past. I've done, are any of the Mag 7 stocks cheap? So we should probably do another one here in 2025 because I'm discovering that maybe Warren Buffett will hold Amazon long enough that eventually it will be a classic value stock of some sort. Shares are off their recent all-time highs, I believe it was, in early February of 2025. So that helps when you get a nice little pullback. And so for these types of stocks, the Zacks Rank is good to look at and is interesting. But if you are holding these bigger cap stocks longer term, it's best to do a deeper drill down to understand why a stock is at the number 4 or the number 5. You should do that with anything. And also to know, is it the entire industry? Is it something just going on with this particular company? Is it something I don't like that they're doing? They sold off some division that I really, really liked. They're spending way too much money on AI or the metaverse or anything like, some other bigger issue is why you might not want to hold for the long term. So being a long-term investor is very difficult. Because you do get these ups and downs in any type of business. You are going to get economic cycles. You are going to get recessions. We're going to get a pandemic in there where the government shuts down the economy. So a lot can go on. It takes a strong stomach to be a long-term investor, especially a value investor. The Zacks Rank can help you pick out winners, but it can also provide a tool even for long-term investors because it does tell you something when the company gets to a number 1. It does also tell you something else when it gets to a number 5 that, hey, maybe there's something going on here I should go take a look at because a number 5 is more rare. And usually it means a lot of cuts like we saw with those home builders. So, yeah, and it even the number 3 will tell you a lot about what's going on as, Pool Corp's got that, or Amazon has the number 3 rank. And so that's because those analysts are kind of split there. So that is telling me something, but having like a number 4 rank on something like Pool Corp, where I might have owned that one a long time too, also, is indicating to me, hey, maybe I should take a look. But a lot of these, consumer focused type of companies are going to have the falling earnings, especially as we get into a recession. And so long-term investors have to learn to ride those out and try to figure out the difference between, the cycle, the economic cycles, and something truly, in danger in the actual underlying business. So I hope this kind of answers this question, but it probably doesn't because there is no firm answer. There is no, while the rank is great for the short-term investor, if I'm trading these stocks and I get the number 5, that is a bad sign. And I do want to get out of those home builders if I have a short-term trajectory and they have all sold off. So the rank was warning you, hey, something is going on here and it's not going to be good in the short term. But it does not give us clear of signal, obviously, because it's a short-term recommendation for that longer term. And I just wish, the Zacks Rank could, because then we would all be easily investing in the stock market. We'd all have our villas on the Caribbean island. We'd be sipping our pina coladas right now, just easily investing in only the best companies for the long term on the stock market. But that's hard to do. It's hard to stay the best for the long term. So the Zacks Rank can help us at least to raise a red flag that something is going on with the underlying earnings in this company, this industry. And as a long-term investor, you need to go find out what it is. So keep those things in mind. But the Zacks Rank is a very good tool. As I said, I do keep it on the target price chart, as I mentioned, so that everybody can kind of see what's going on with the rank in our portfolio. If you are a premium member, you can also, keep your own portfolio on Zacks.com. You can download it into there, and that will also as well track the Zacks rank so that you're aware when it changes. But again, remember, it can change daily. So long-term investors aren't apt to make changes, on the daily basis based on what the Zacks Rank is going to say. And one other thing about the rank right now in the value investor, you can see the stresses going on just overall in the economy right now with the earnings side of things. While it has been a good earnings season on the beat side and not a lot of warnings, and not quite, people aren't saying the R word yet from the companies. They're not saying we see a recession or we're in a recession, but there's a lot more caution there. And there's uncertainty about what's happening with the tariffs. And so a lot of the companies getting more cautious. A lot of the earnings are starting to, see some adjustments lower. So that's something to watch in the next couple of quarters here as we move along in 2025. Another thing to keep in mind is that, again, it's always changing, the Zacks Rank. And right now, when I look at the Zacks Rank on the value investor portfolio, there are no Zacks number one ranks. So that also tells you a lot about what is happening with the earnings after this earnings season, because we are winding down now. And that if you are a Zacks number one rank, I'm giving even more kudos to you right now. Something real good is going on if those estimates are being raised, strongly with the companies right now. So I'm going to be taking another look at the list of number ones. Well, Cal-Maine Foods is on it, as we know. But that is maybe, hopefully, a temporary situation where, the egg prices don't stay this elevated for very long. But some of the others are not going to be these kinds of cyclical plays. So, we're going to keep screening with the Zacks Rank here, even though we are long-term investors. It does help us to find some hidden gems, and then it helps us to kind of see what's going on as long-term investors. So the stocks, again, that I mentioned were Cal-Maine Foods, ticker CALM. Calm is their ticker. Nobody's calm right now about the eggs, but hopefully we will be soon. Then we talked about the home builders. We talked about Pulte, ticker PHM. Toll Brothers, I also own that in my own personal portfolio, as well as the value investor, ticker TOL. We talked about Builders First Source, ticker B as in boy, L as in Larry, D, R as in Robert, BLDR. And I also own that in both the value investor and my own personal. We talked about Pool Corp, ticker POOL, and Amazon, AMZN, which I also own, and I mentioned that. And Micron, that's in the value investor portfolio right now. Still to report, it's a Zacks number 4, so we'll see what happens with that. Ticker M as in Mary, U, MU for Micron. And as always, send me questions because I do look for them. And this was a good one. And we'll be talking more about the value stocks as the weeks go on. So send those questions in and subscribe. You can get us on YouTube now. We're on the podcast channel of Zacks. And you can get ETF Spotlight and some of the other podcasts also on our YouTube channel. You can't get the Market Edge there, however. You have to be on our regular YouTube channel with the videos because that is a video podcast now. But you can get all of our podcasts on Apple and Spotify. Even the Market Edge are on those as audio versions. So be sure to get us somewhere and be sure to subscribe. And I will see you again next week with some more value stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified specified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.